Tell me when you're ready, Sydney. I'd like to now introduce to you a man who, in these circles especially, needs no introduction, which I always think is a funny thing people say, that I'm going to introduce to you somebody who needs no introduction. But Dr. Richard Swart is someone who everybody in the industry follows, reads, knows. Nobody knows the research, nobody knows the field, nobody knows what's actually going on better than Dr. Swartz, and it's a pleasure to have him here. Plus he has really pretty pictures that he's going to show us, which I always like in a presentation. So Richard Swart, PhD, UC Berkeley, also Crowdfund Capital Advisors. This is going to be a fascinating talk. Every time I hear Richard talk, it keeps me glued to what he's saying. So Richard, the man who needs no introduction, was already introduced once today wrongfully. Here he is rightfully.
Oh, thank you. I'm going to try to go relatively fast through a relatively small set of slides so that we can have more time for Q&A. That being said, I think there's 17 slides, so we're going to go fast. What I want to do is talk about a couple of common perceptions or misperceptions about crowdfunding and its evolution. And so where I have data, I'll talk about data, and where I have assumptions, I'll try to be clear that I'm talking about assumptions. The universe of what is known about crowdfunding is actually very small. There are thousands of pundits and lots of opinions, but actually empirical-based, data-based evidence, there's not much out there, which is unfortunate. But we'll talk about what we know. So, tweet, I like Twitter, and I still haven't quite figured out how to use it, but if you can help me, I'm being a little bit facetious. But then LinkedIn is where I do most of my posting. I hate Facebook. I'm so sick of Facebook. I don't do anything on Facebook. But LinkedIn I'm on all the time, so please connect with me on LinkedIn. So let's talk about some of the basic data about what we know about who's actually using crowdfunding. We're going to start with the customer in mind here. So the question is this middle America? Is this black, white, male, female, educated, uneducated? Is the rhetoric which we're going to talk about is this works for everybody everywhere. This is going to democratize access to capital, and this is going to change the country. And unfortunately, the data says that's not true. So let's talk about what we know so far. Almost everybody has a college education. This is people who are using crowdfunding to fund their businesses, I should be clear, or their projects. Almost all are male. About half of them are working full-time, and this is a side gig, and about the other half are in their startup mode or they're working in their business. Average is 35. On the peer-to-peer lending platforms, the average age is 38. So this is not a 20-year-old's game. This is a mid-30s, early 40s is a typical customer. Most companies that crowdfund have 2 employees, so you've gone beyond just you and your idea. You actually have a little bit of traction. You've brought on your first partner. You're trying to do something. You're trying to scale. So it's a micro enterprise. The vast majority of companies that use crowdfunding are very small. Now, there's a whole evolution of corporate crowdfunding we're not going to talk about today. Coca-Cola, Procter & Gamble, Condé Nast, American Express. Big companies are playing with crowdfunding. That's a different discussion. In our survey, we did a research project. The largest firm we found that had used crowdfunding to date was 20. And these are people that are actually trying to get money to fund an enterprise as opposed to a corporation running a marketing experiment. Women typically set lower goals than men, and that's universal constant of crowdfunding is that women seem to set lower target goals, and they achieve them with a fairly high frequency. So they're actually more successful on a percentage basis than men, but they're the minority of the market. So few women raising smaller amounts successfully is the bottom line story here. And it's interesting because in our research we looked at what are the most predictive factors of crowdfunding success, and it should be no surprise if you understand how crowdfunding works. It's social media penetration, network density, ability to market over social media channels, and women are 73% of the users of Facebook. I think it's like 91% of the users of Pinterest. So many of the evolving channels, women dominate men in terms of utilization. The question is it utilization for business goals or not? And I can't answer that question, but it's surprising that women are setting lower goals. So let's talk about some of these big numbers. And a couple of these slides repeat the last one, but most of this is new information. So 15 trillion is the size of the real estate market. I think 450 billion is a pretty good accurate estimate of how large the real estate crowdfunding market will be in the next decade, globally, not just U.S. 4.56 trillion is the amount of money sitting inside of IRAs and 401ks and 457 plans. So if you take, a 100% of the money sitting in retirement accounts and reallocate it through crowdfunding, that's a pretty large market, my friends. 81 billion is an interesting story. Yebao, and I'm sure I'm mispronouncing, if anyone speaks Chinese, please correct my pronunciation here, but this platform is basically a micro-lending platform that launched in China. In 9 months, it brought in $81 billion worth of funding until the Chinese government shut it down. So that represents two things: the hunger of the Asian market for legitimate investment opportunities, and their banking system is probably just as bad as our banking system, if not worse. And there's a massive amount of capital. Our econometric model of crowdfunding potential shows China, if they change the regulations, will be 45% of the market. They're going to dominate if they ever change the regulations to really allow it. But the sleeping tiger is waking up. There's active activity in Thailand, Vietnam, Singapore, Hong Kong. Last year, Korea had almost $200 million in equity crowdfunding. Most people don't know Korea has crowdfunding, let alone that it's already going. There's a lot of activity happening that's off the radar for most folks. 51 million eyeballs. One of my favorite crowdfunding platforms called Rally Me. Former professional skiers and Olympians doing crowdfunding to help raise money for other athletes. During the Olympics, their site drew 51 million media impressions during the Sochi Olympics in 2.5 weeks. 25 Olympians used their platform. 4 medals were earned, including the first crowdfunded Olympic gold medal. Obviously, they had 10 or 20 years of training. You can't just take credit for it, but an Olympic gold medalist did use crowdfunding to help fund their expenses of getting over to Sochi. 86, 50%, 6%. This is an experiment that was run at, I think it was Colorado State University, looking at crowdfunding for universities. 86% of the people that donated money were new to the university, had no contact, weren't alumni, weren't students, weren't in the donor base, were new information to the university. So universities need to pay attention to the power of crowdfunding to increase their donor base, which also applies to most NGOs. 56% of them were under the age of 30. So young donors that are not part of the university network and are engaging through crowdfunding mechanisms. It's a 30-day experiment. So lots of limitations on 30-day experiments, but interesting data point of the power of crowdfunding to engage new communities when done well. So this is, I got misquoted horribly last time, so let me be very clear this time. The 2 reporters misquoted me, so let me make this clear. Ethan Mollick did a study. I did not do the study. He looked at people that had raised over $5,000 in only 3 or 4 categories of Kickstarter, basically gaming, technology, product type sectors. Not always, but mostly that's what it was. Some of them were donations to community projects. Over a 5-year window, so some had been a year old, some were 4 years old. In the past 5-year window, random sample of projects, 90% of the people were still engaged in the activity for which they had raised money. Does not mean they turned into profitable companies. That's where I got misquoted. They were still engaged in the thing for which, so whether it's a community dance troupe, whether it was a summer Boy Scout camp, whether it was a marathon run for children with cancer, whatever the project was. And some of them were technologies, but not all. So I want to make sure that you're really clear. But the question is, up to 4 years later, with a small amount of money, people are still doing the thing they set out to do. Why? Social cohesion, motivation, pressure from the network, social contract. I don't have any sociological explanation yet, but it's a really fascinating number, and it's much higher than you would expect. That people are still engaged in the thing they crowdfunded to do. They didn't pivot either. Most of these people are still doing almost exactly the thing they set out. Maybe a bigger model, but it's not like a flash in the pan idea and they went off to do something else. They're still pretty engaged. And 5,000 is not a very high bar. Australia, ASSOB, the small scale offering board, more than 70% of the people, the companies that have raised money on the Australian small scale offering board are still in business in the last 8 years. Most small businesses fail. It's a fact of life. It seems like it's almost the mirror image of normal. Now, I'm not saying that crowdfunding is the perfect way to pick more successful companies. What I'm saying is there's a correlation between companies that successfully execute crowdfunding campaigns and those companies that are more successful in the long run. One hypothesis being, you know how to market. You know how to tell your story. You can communicate with your customers. Your value proposition is understandable. Maybe it means you actually know how to execute something and you pulled off a campaign. Maybe it means you built a better team. And there's a lot of reasons why this might be. We don't know the whys, we just know what's happening. But there's strong evidence that companies that are successful at crowdfunding are statistically more successful than companies in general. There's obviously lots of filters in there. Like one of the Australian filters is to get on the platform, you have to have a deep review by the equivalent of a CPA. So both background checks, due diligence, financial models, business plan, somebody has to sign off that your planning makes sense. So there's obviously a curation and gating mechanism there. And I actually love the idea of curation inside of crowdfunding. I don't think this has to be a totally free market, anything everywhere. And Slava would hate me on Indiegogo. But I like the idea of having some curation, especially in emerging markets and areas where it's new. The idea of following an investor like the syndicate model and angel list, following along with people that have deep experience in the sector, I think makes sense. And I think having a review from somebody who's a professional sends a signal to the crowd that there's some quality indication about this company. So let's take some takeaways. Okay, let's keep, oh, that's much better. So, institutions are figuring out that these platforms are much more efficient, between 30% and 50% of the cost of underwriting a loan than a traditional financial institution, without all the Dodd-Frank and all the overhead of compliance costs. So the question is, how do you underwrite and price risk effectively? And there are some very smart people helping them figure that out. But I think you're going to see online consumer lending grow 1,000% this year. I mean, it's literally exponential exploding. It's not slowing down. Lending Club's going to IPO pretty soon. We all know that. When Google Ventures gave them $125 million, their valuation was $1.5 billion. Their IPO just over a year later will probably be north of $4 billion. That's going to send a signal to the market. That being said, most of the big institutional players are already there. They're already putting in money. Sequoia, Andreessen Horowitz, Blackstone, Guggenheim, and most of the big guys are already playing in the market. And there's so much demand from the institutional side that they literally are saturated, and they have no more capacity to absorb institutional investments. And those people are now having to go to Europe because there's no more ability for them to deploy money in the U.S. peer-to-peer lending markets. They're full, which is a nice problem to have if you're Ron Suber. So, Silicon Valley is a crowdfunding bank. So this is a hint about a slide I'll show in the future. We've done some research on funding patterns. And what we found was Silicon Valley is one of the major sources of capital for crowdfunding projects everywhere. And there's so many people in the Valley that are engaged in technology and in crowdfunding that they're funding projects all over the country. And a lot of that money is flowing to LA. Ironically, there's sort of a north-south thing happening where a ton of money from the Bay is flowing into Santa Monica and Los Angeles, not the other way around. You don't see a lot of LA money flowing north. So let's talk about flows for a second. So we looked at and this is one of my graduate students, and he hasn't published his paper yet, so I'm going to let him take the full claim for it when he publishes his paper in a couple of months. So we see a pattern. First pattern is money flows from the heartland to the coasts, not from the coast to the heartland. Unfortunately, the data does not show that middle America is successful at crowdfunding. The data shows that people on the coasts are successful at crowdfunding. We're talking about Silicon Valley, LA. Users are very sophisticated. So if you want to know who the typical crowdfunding funder is across Kickstarter and Indiegogo, who waits in line for an iPhone? Early technology adopters, typically in their 30s, typically male, disposable income, college educated, living in urban centers on one of the other two coasts. It's not a truck driver from Tulsa. It's a software developer from Anaheim or something like that. That's the typical model. Early technology adopters at the very early stage of the market. Unfortunately, there's almost literally no penetration of minority communities. I'm saying there's none, but I'd say there's extraordinarily little. And that's also awareness and understanding. It's not just they don't know about how to do it well. What we're seeing is they don't know about it. There's just a lot of information not out there yet. So industry cluster effects. Let's look at some data. This is, again, my graduate students. So we've actually built this visualization engine, and it's not live yet, but it will be fairly soon, where you can actually go on our website and play with some of the data. So this is all the Kickstarter projects in the world. The bubbles represent the size of the funding. Anyone want to guess what the big one is? Pebble Watch. Okay, so these are actual project-based funding circles, okay? So you see it's pretty international. You know, Europe, more activity in Africa than a lot of people would think of. Western Europe. Australia, surprisingly small funding, although there's a lot of it going on there. So here's North American projects zeroing in. So you see a big cluster around, help me Texas, is that Houston or is that Austin? The big bullseye there. You see, probably Dallas. You see two circles, you see the Bay Area and you see LA, and you see a fairly strong Seattle component, you see a New York component, and that's about it. Not a lot's happening outside of Silicon Valley, outside of LA, outside of New York, and outside of Austin. Okay. So here's the population of America. So this would be population density. If you just assume a certain percentage of the population engages in crowdfunding, it should be fairly close to that. It's not. Not even close.
Not the location of the event.
Location of the company receiving the funds, not necessarily where the funds are flowing from in these slides. So I live in Memphis, I want to crowdfund, so you're a Memphis company. Okay. So then looking at the largest cities, you see some interesting variations. You see Denver, Boulder, you see Salt Lake City having quite a bit. I believe that's, would that be North Carolina, South Carolina Research Triangle? But you're seeing differences in cities. So if you look just at standard population, it should mirror fairly closely. But the East Coast should have a huge amount. It doesn't. You see a lot of West Coast effect, and not a lot else. You know, the heartland of America, Dakotas, Nebraska, Minnesota, you're pretty much not on the map. And let's look at it. Funding in cities that have at least 100,000 people. So eliminate the small towns and look at cities that have at least 100,000, which isn't huge. There's hundreds of these things. There's 256 in America. Again, a huge effect of Texas. California blows it away. But the East Coast is so population dense. Where are they in this map? There should be a lot more. So the East Coast is not engaging very effectively. So let's talk about what this all means, and I'll answer some questions and wax hypothetical for a couple of minutes here. So first of all, if you're raising money for your daughter's dance troupe, it does not matter where you are. Community projects, community funding, dance, arts, community impact stuff, equal effect, no population effects, no geographical effects found in our early studies. You're just as likely to be in Atlanta or Austin, doesn't make no difference whatsoever. But unfortunately, it also has no effect on population density. So we're not seeing a correlation between the bigger cities have the most projects. There's definitely clusterings where certain cities and certain communities are very aware of and using crowdfunding. In other cities, it's not on the map. Literally, people are just not aware of it. So that's a question of ecosystem intervention or state policy or economic development people, but there's obvious gaps in the information distribution. And those gaps look like it's East Coast, mostly. So the next question is, does crowdfunding disrupt or reinforce the flows of capital where there is an existing industry? So for example, video games, or health technology, or software apps, or things like that where there are existing industries. And I won't go through all the statistics, but we actually controlled for density of companies in areas, and we controlled for population density. And what we found was that crowdfunding is dramatically reinforcing existing concentrations, meaning that if you are in Los Angeles and you are a gaming company, which is where most of them are, you are far more likely to be successful in crowdfunding than an equal-sized company in gaming with the same experience in New York City or in Florida. So if you're in the heart of an industry, you're much more likely to get funded if you're in that industry. If you're outside of that, and I can't give you statistics, this is all correlational, not causal data, much less likely to get funded. So the question is that network density effect? Is it they're better connected, they're better at marketing? Is it they get people to amplify their message? We don't know yet, but unfortunately the early data suggests that, and again, this is Kickstarter and Indiegogo data. This is not equity crowdfunding, which is a whole different dynamic. This is non-equity crowdfunding. Location matters, and location matters the most if you're in the heart of the industry. So if you want to go into software, move to Silicon Valley and do crowdfunding. Don't do it from Oklahoma or Omaha. Not going to get funded most likely. And there are exceptions, of course. But it seems like being part of that community dramatically increases your ability to get funded. So the question is, if crowdfunding democratizes access and equalizes opportunities, will this pattern be the same for equity? And we don't have enough data to answer that yet. I certainly hope not, but the early data suggests that people that are well connected and networked into an industry leverage those connections and pull off successful campaigns. By the way, a similar study was done in Denmark and Germany. Exactly the same effect was found in Europe. So that's not published yet either, but I'm aware of the study. No difference whatsoever, European markets, American markets. Industry concentration effects are huge. So, if we actually want democratization of funding, we need to understand why these effects are there, and we better figure out how to train people. I know I advise a lot of companies and a lot of platforms and a few governments along the way. What I found is that the vast majority of people on any platform anywhere that attempt crowdfunding don't prepare. They don't do their homework, they don't know what they're getting into, they don't have a strategy, they haven't figured out the marketing plan, content distribution, media amplification, bloggers, PR outreach, structuring your rewards, pivoting your model, all the things that go into an effective marketing campaign. I won't say what, but I'm on several boards. I'm on the board of a not-for-profit. I was in the development officers meeting Tuesday, and I said, our crowdfunding campaigns are not going so well. I'm like, what crowdfunding campaign? Remember me? I'm on your board. You should probably have called me before you launched one. We decided to see how it works. This is a 50-year-old 501c3. This is not like, they've been around for a while. They have, decent budget. They decided to try crowdfunding with no strategy, no preparation. They did a quick video in the office and launched a campaign. And then they started reaching out to their network. Anyone want to guess how much money they've raised? $400. It should be $400,000 if they pulled it off right. It's a compelling message. But I see that time and time and time again. So the question is, again, this is a policy question, who's responsible for training? Do the platforms have to say, guys, you're not ready, and turn the business away? Probably not going to do that. There's no law that you have to have good marketing to market, and you see that every day on TV, horrible campaigns. But the question is, how are we going to get information out there that's actually actionable and useful and allow people to have metrics and baseline measurements and trying to figure out if they're ready to launch crowdfunding? And like one platform I like is CrowdIt out of Missouri. They actually have what they call suits, which are basically mentors on their platform available to help mentor companies wanting to use the platform. It's a really interesting model. I don't think anyone else is doing that exact model. It's actually built into their platform where you have mentoring available to you, and the vast majority of people don't take advantage of it, and it's free. So secondly, is network density a factor? We don't know. But I can tell you that network density affects a lot of other, basically how well connected are you and how diverse is your network. So we also don't know the effect between online and offline marketing. A lot of the campaigns that I've studied that are very fascinating had an offline component. Events, pre-launch activities, parties. This is a marketing campaign. This isn't just an online video promotion. So I think we need to tease out more what factors actually were being used in what sequence to have success in what types of campaigns. But I think there's not enough attention paid to the offline part. And then we also don't know, is there a qualitative difference between a software developer in San Diego versus Seattle versus St. Louis? I mean, are there differences in the types of campaigns being launched, and is that part of the reason why we're seeing differences? We don't know. Again, we don't know a huge amount of information. And then, why aren't minorities more involved? I'm not the right person to answer that question. We've got Dr. Sampson here, phenomenal resource. There's other people in town that are trying to attack those problems. But we know that the information is just not getting to that community. So, And this is Richard Swart 101, not based on evidence. This is just some of my thinking, okay? Try to be clear here. So it's very hard to tease out causality in most things, so I'm just going to talk about these factors that are associated with success. And some of these are created by successful crowdfunding, and some of these are contingent or necessary conditions to be successful in crowdfunding. First one, of course, is trust. I think one thing that is created in a successful crowdfunding campaign is a sub-network or an activated network that trusts you, because you have been transparent, honest, and open about your motivations, what you're trying to do, your business model, and your plans, and increases your trust factor to the extent you're honest and transparent, of course. But I think we cannot stop talking about the importance of, as an industry and as campaigners, ensuring that we are trustable people. And I've seen some really interesting stuff lately. The Heelby fiasco a little while ago, a campaign that was clearly misrepresenting its technology. Well, I'm not going to suit here. I believe was misrepresenting or exaggerating the potential of their product. And a lot of people on social media had the same opinion. I haven't done a due diligence, but I had some concerns. So intelligence, multiple layers of intelligence. One layer of intelligence here is a smart campaign, well thought out, well executed. Secondly, crowdfunding is a great big data game. You have an amazing ability to look at the patterns of interaction, the network effects between people on your campaign, who talks to who, what the questions are. You should track your competitors before you launch your campaign, look at what they're talking about. People are not spending enough time mining the intelligence available through crowdfunding. Huge opportunity. Teamwork. Average campaign that raises $100,000 requires 136 hours of work to pull off the campaign by the launcher in 6 weeks. 22 hours a week of work, basically. Average. Some are 50, 60, 70 hours a week of work. You have to have a team in place that can execute and work well together. And the irony is the interesting thing is you're also creating a team between you and your backers. There's a social contract that oftentimes gets created where they become invested in your technology or your campaign, and they give you rich feedback. I mean, forget focus groups, just launch a crowdfunding campaign these days. Design. Elegance of design, which does not mean over-design, matters. I see so many platforms that are good enough, but in this market you can't be good enough. Or the videos are just somewhere between amateurish and just not well thought out. And I don't mean you have to spend a ton of money, but spend the time thinking about the messaging and the lighting, and for God's sake, get a couple of good microphones, please, because the audio quality is so bad. So the visual elements, the graphic design, your marketing materials. People don't spend enough time designing here. And you think about it, you want people to socially share your content. People don't share content that doesn't look good. So it's either very funny, it's controversial, it's emotionally engaging, and or it's well designed. But if you don't have the first three, you better have good design. People like to share things that look good. And then lastly, this is always about the story. The research that we know about crowdfunding shows that people are still making investments, oftentimes are still investing because they like what Rodney's trying to do. They like his story, they like his passion, they like his purpose, they're trying to back Rodney's passion, and they want to back him. It's incidental that he has a company. People are still pretty much investing in humans. Eventually, crowdfunding will evolve to dashboards and risk allocations and what sectors you want to be in, and you want to avoid social media companies, and all those sort of tools will develop as the market matures. But right now, people are still pretty much investing in human beings. So the story has to be very well thought out. One of the most interesting things I've ever seen in crowdfunding is a campaign, I think at Penn State, where they're trying to launch a satellite to go to the moon, a bunch of graduate students. What's interesting about it is the quality of the video. I'm not commenting on the project necessarily. It's an interesting project. But you would expect it to be, here's our technology, here's our model, here's a map of the moon, here's our engineering. The campaign videos is 6 kids sitting in a forest talking about their passion and the reasons they want to do things. And you feel like you connect to those graduate students. And they update their videos frequently. I think it's done now, but they were updating their videos frequently as they met milestones, as they got funding goals. And you felt like you were backing those kids. You know, you're old when you call graduate students kids, but what they felt like. That is interesting. It's not what you expect. High technology, space science, but it's still kids in a forest talking about why they're doing this research, why they want to do this. Brilliant execution of this campaign. So that is my brain dump. I'm going to go fast to open up time. So that's my Berkeley address. I also work with CCA, so if you want to ask me a data geek question, I'm certainly happy to help. I don't really engage in Twitter, but I push out stuff through Twitter. I don't engage in Twitter because I live on airplanes, so I'm gone most of the time. But does anyone want me to take at least 5 minutes for some questions?
No, sir.
Not, you're too late.
Just to take a comment based on something that you said.
Please.
You could reply to it. I've done a lot of interviews, and I hear direct response to my 25 years now. And education really is, in my opinion, and crowdfunding was a new form of direct response. And when you said that PNC backing on the coast would be interesting parallel to direct response of what we always call gold report sheet, where you've got a buyer going down the Atlantic coast across Texas and up to the Pacific coast. And we speculate that the UK somewhere based on the coast or what, but for whatever reason, that's just another parallel.
Well, the pattern, I won't get academic on you, but that's also economic migration in patterns of America, where people were leaving Northeast and going to the West and the West coasts. And you see huge transitions where people are, for economic reasons and technology and job reasons, they're moving away from those areas. So the western half of that horseshoe is basically driven by macroeconomic factors, which means you also have more disposable income, higher educational levels, all those sort of things. Yeah, sorry, academics, I can't help myself. Alan.
Yeah, so about
Just could for the audience and at home.
Thank you very much. So I was just going to ask you, so how do you draw the parallel between the success factors that you listed, between a crowdfunding campaign and any B2C startup, any type of B2C startup?
They're very close. I mean, this isn't rocket science. It's trust, it's integrity, it's story, it's messaging. Design is hugely important. But I guess what I'm trying to do is point out these sort of softer subjective factors that I think don't get talked enough about in our industry. I mean, obviously, if it's a consumer-based product, it's all about customer validation and acceptance, which is all about getting that early-stage feedback, iterating your model, talking to your customer, doing your MVP. I mean, you understand this process extremely well. So there's nothing new under the sun here. This is just the next stage of the evolution of social media engagement. This is the mechanism that's been around for thousands of years. It's just, I was talking to SEC and Congress. I said, look, crowdfunding is inevitable. You can either regulate it or you can have it happening, but it's going to occur. So this isn't optional, folks. Some people in DC still think it's optional, I believe. This is going to occur, and it's going to be huge. But I don't think it's really that innovative. I hate to throw a wet towel over things. But this is just the next iteration of our ways of showing trust and moving money through web interactions. It's nothing next, it's the next stage. And we're seeing this happening globally. I mean, there's a lot of bad data in the industry, and I'm trying to get some good academic data that people can consume, but it's growing exponentially. There's no doubt about it. A year and a half ago, my database had 1,100 crowdfunding platforms in the world. I looked at Mass Solutions a couple of days ago, and they have 2,650. I haven't verified his data, but I'm assuming it's roughly correct. So that's a doubling in 1 year. I don't know the funding levels on those platforms. There's lots of I don't knows in the statement, but I know it's growing exponentially.
Just what do you see the peer-to-peer crowdfunding? It's become very successful one. What do you see? What's the next trend? What segment of the crowdfunding will be the winner in this year?
Well, real estate's going to be gigantic. There's no doubt about it. Just it's a huge market that we can disintermediate some of the huge institutional players. I'm not a commercial real estate expert. Don't pretend to be one. I'm still wrapping my head around all the nuances in the market. But just on the sheer size of the market and the economics of the market, it's going to get big. I think you'll see multiple very successful players in the market. I think peer-to-peer is going to continue to grow, and I think what you're seeing is there's some sociological data that shows that people under 30 basically don't trust physical institutions. They don't trust banks. They don't trust governments. They want to do everything mediated through web interactions. As that generation continues to age up into the 30s and 40s, their income levels go up. I mean, that's why Ally Bank is killing it. That's why some of these non-physical banks are going to kill it. So I think that you're going to see a major shift in funding patterns away from bank lending for a lot of early finance onto online platforms. It also allows you to do, if you will, e-insurance. You can go on and compare rates, and it's fast and it's seamless, and you can do it from Starbucks. You don't have to go into a bank, and you can talk about structural issues of Dodd-Frank and the reasons there's litigation and regulation. I'm not a lawyer either, so I won't go into all the reasons around that. But just culturally and demographically, the youth are much more comfortable living through their technology-enabled devices than they are going to physical institutions. So that trend is going to continue. I was in Cairo recently, and I went to an accelerator in Cairo, and I couldn't tell the difference between Cairo and San Diego or San Jose. Smart kids, English proficient, very smart developers, interesting products, using lean startup methodologies. I mean, the younger generations are very much the same internationally. And crowdfunding is and also think about investing perspective. As the cost of a launch goes down and down and down because of ubiquity of technology, you're going to see more and more companies attempting to launch, and crowdfunding is sort of the default option for a lot of these early stage companies now.
Question?
In the back there.
How do you feel about platforms in terms of specialization or acting as general?
You got a heck of a lot of money, and I mean tens of millions of dollars, you can take on the big boys. If you don't have a massive marketing budget, 'cause I know CrowdTilt is one example. They have a fairly healthy budget for social media marketing. I'm very skeptical of the ability of a broad platform to penetrate a market if they're not VC backed. So just unfortunately, there's enough money flowing around to your competitors for the venture. Indiegogo just raised 40. Our crowd closed a $25 million round last week. Kickstarter doesn't need any more money. I mean, they're rolling right now. But I mean, the big boys are so well capitalized that just the customer acquisition challenge is huge. So if I were to be a platform, and I'm not intending to launch a platform, I would try to find a specialized niche, and I would try to kill that niche. I wouldn't try to take on the big boys. Yes, sir. Then I'll come over here. Actually, he has the microphone. Let me get the gentleman first.
Very good stuff, thanks. Are you or can you drill down into more specific asset classes with your data studies, like the top 10 equity platforms, Angel List, Funders
We're
Club,
just starting to
so
do
on?
that. I don't have that answer today. We're just starting to aggregate that data.
Okay.
We have much better visibility into British data and European data than American data. They play better.
So do you
So-
think most under 30s can't invest on Angel List. So
No, only a
how
very few.
correlated is the data, is my question right now.
How, what is the data?
Is it correlated to what you just presented, or should we just kind of wait and see how that looks?
I could give you a wild guess, but I can't give you an informed answer on that one.
Okay.
So, yes, sir.
Equity crowdfunding as there are more opportunities for equity crowdfunding, state laws are changed. Do you see a day when VCs will start their own platforms?
They already are. I know several private equity firms, hedge funds, and VCs that are buying or acquiring crowdfunding platforms.
Thank you.
Multiple instances of that.
Question?
Somebody in the front here.
I have a question here.
All the way up. The young lady.
Right here.
Oh, I missed her?
You missed
No.
it. Okay, any other question from Dr. Swart?
I'm trying.
You have it
She has a
here.
question here.
She has a question? Yeah, you're waiting for a question. Go ahead. Ask.
Thank you. Yeah, I needed this. So I was curious about your data, campaigners data, like profile. 84%, of course, is to me quite disappointing, but hopefully will be better. But my question about bakers, have you done any analysis on typical bakers profile, like education, where they live, male, female?
We're just starting to pull up. There's some data looking at gender effects. Alicia Robb did a study looking at do women back women or do men back women or mixed gender teams versus mixed gender funding. And I think her sample was Indiegogo data, and it was a 1-year window. And what she found was there's definitely what is called homophily effects, which is that we basically invest in people that look like us. So if you're Chinese American, you're more likely to back a Chinese American, or white or black or male, female, gay, straight, and whatever your self-identification is typically unconsciously what you typically invest in. And that it's not just it's sexual orientation, it's gender, it's race, it's area, like your East Coast, West Coast, and it's also the school you went to. So there's a mass concentration effect of elite business schools on the coasts. That's where most of venture capital funding flows through. And they've done some research that those investors presented the exact same information, but where they'll show a video with a black female versus a white male, presenting the exact same pitch, same words, same tone. Huge differences in how they rate the deals. So we are racist, sorry, it's still there, huge effect. So it seems like people are more likely to back women if they have a male co-founder or partner on the team. Women, entirely women-led companies are having a harder time raising money in crowdfunding. Now, I want to say all of the papers I'm talking about are on our UC Berkeley site. Everything that we post publicly. So it's the Fung Institute, or you just do UC Berkeley crowdfunding, you'll find the links. We have a conference every year. We bring in academics from all over the world, and we post all the videos of all their presentations and all the papers. Everything's up there. And since we're a university, everything's free, and there's no paywall, and there's no registration, and just go get it.
Yeah, actually, I was a participant in that beautiful conference that you had last September. Actually, it was very great, and we do have the videos, all the videos in the Fund Institute and also in Crowdfunding.
Right. Yeah.
So we had over there. But I had a question, Dr. Swart. We're here. The team is the Crowdfunding USA, but you travel all around the world. You know, you go to the other countries basically, and they do have crowdfunding. If you want to compare the USA to the other countries, where are we at basically compared to the England? I know Canada just came back from Canada. They do have aggressive law, the proposed law for the crowdfunding, and although they have about 13 regulators in different provinces.
Yeah, it's different model.
Yeah. What do you think? What are we at? I mean, as far as the Title III has not been, everybody knows it's not been passed in a way of. So what are we at?
That's a long, broad question. So observation number one is the Europeans can't figure out why we're so freaked out about fraud. They think we're exaggerating the risk. They just think of it as one part of the funding continuum, which is appropriate for a small segment of companies, not all companies. And they see it as being a very efficient way for some companies to find funding, and they think of it as a variation of cooperative finance. It's been used for hundreds of years in agricultural financing, and they just see it as a co-op online essentially. And they don't understand why there's so much concern in the U.S. about fraud and financial misrepresentation, which brings me to why is there so much concern about fraud and misrepresentation in our market. And I'm not naive. There is fraud. There will be fraud. There will always be fraud in any financial market anywhere in the world. I'm not saying it's this is a situation where there's not going to be any fraud, but the empirical data shows the baseline rate of fraud is extraordinarily low in crowdfunding markets. Maybe that means the criminals haven't shown up yet. I'm not saying they're not going to be there, but I think that what you're seeing is a political process. And I was at the very first meeting of the SEC a week after the Jobs Act was passed. I've been at the table since the very first. And I did not create the Jobs Act, by the way. There's 500 people that claim it, but I take zero credit for that. But
that's why it's not happening.
Yeah. The point I'm trying to make, though, is the level of hostility in that room was palpable. They no longer are hostile to us. I think David Blass is doing an exceptional job, and his team is trying to craft regulations that make sense within the contours of the law. But I know there's phenomenal political pressure on them. And I know that objectively from the mouths of highly placed people, which is why Title III is dragging and dragging and dragging and dragging and dragging. So I unfortunately think Title III in its existing form is almost dead on arrival. I'm not optimistic about Title III in its current form. There were multiple bills that were ready to be passed had Mitt Romney won. I'm not making an opinion as to whether he should have won or not won. I was saying had there been a change in administration, there were quote-unquote corrective amendments and legislation that was ready to go in, wasn't submitted. I know there's a strong desire upon several senators and congressmen to do Jobs Act 2 or to fix it, but I also know there's a huge challenge. I mean, the joke is if you have a battleship named after a war hero, you probably still can't get that through Congress today. And they can't agree to do anything. So finding a corrective fix to the Jobs Act will probably require change of the Senate and change of administration. So we're probably a couple of years out. So I'm not optimistic about Title III having a huge impact in the short run. I think Title II will continue to grow aggressively, and we're seeing some very creative uses of 506C outside of sort of what you would normally think, like closed networks of investors are still doing filings under 506C. It's not the public part. So our regulatory schema is putting a very large brake on what otherwise could be a huge market, and I think that that's a political problem. Other countries, like in Europe, like in a couple of countries, they said, well, it's just cooperative finance called something else, go ahead and do it. I think Italy took 12 weeks to pass their rules, or 11 weeks or something like that, and they literally, just 3 months, and they were done. A lot of European countries are much more realistic. The European Commission has come out with a large study strongly endorsing crowdfund investing, extremely strong endorsements. So Europe is much more sane about it and much more realistic about it. But that being said, smaller funding, smaller markets, different, we can't make a direct analogy. There's interest from Latin America We're going to start seeing crowdfunding emerge in Latin America fairly quickly. It's already there, but it's going to get bigger. What we're good at is we created the pledge and donation model, and no one's catching up with that. We also have the most interesting, Kiva and the microenterprise and models. They're dominant. So most of the pledge and donation and philanthropic models will continue to be U.S.-based, with a few exceptions, but mostly U.S.-based, because the U.S. is by far the most philanthropic country in the world, 10 to 1 compared to anybody else. So that's not going to change. Equity crowdfunding, I think in 5 years, maybe we'll have a solution which will allow common man equity crowdfunding to work in a transparent and affordable fashion. The current regulations I'm not optimistic about in the slightest. I think we're probably over time. So I actually have a 4 o'clock appointment, but I'm coming back. So if any of you have questions, I'm not leaving you. I'll be back. So, all right, thanks everyone.
Thank you. I think she did. You did?
Oh, all right. Do it again.
All right, because I think we're a little bit behind the schedule here, and I'm going to play the MC because our MC is going to be double job. He's been in panel and also doing the sharing this, helping me sharing the stage. But Kendall Armelico, I slept at the Holiday Inn last night, so I can spell your last name. But I want to tell you, I just want to say that it's such a pleasure to be in this room and new faces and people that I've been talking for a long time, and over the phone, over the internet, over the chatting, and I see